Something that is hot at the moment is the changes in relation to GIC, which is general interest charges. So I think that's going to change the landscape a bit as well. So as of 1 July this year, any new tax debt, new ATO debt, the interest incurred on that debt will no longer be tax deductible. So you can still do an application under the law for a remission to get that interest remitted back if there is a case for it and factors for it, which we do a lot of work around. But prior to this, any interest that's been incurred owing to the ATO, you've been able to include in your tax as a tax deduction. Do you think that's going to change a lot of business owners' views on using, I hate to say it, using the ATO as a small business bank, which the ATO want everyone to stop doing, which they don't like us doing, which I think is a huge factor behind this law coming into place. But do you think there'll be a bit of a shift in thoughts around this?
I think the ATO and government would like to think that there's going to be a shift. I personally think that most of the directors don't give it a second thought. They're too busy worrying about controlling their business and other parts of their business, and tax is the least of their concerns until such time as it's at the forefront of their mind as a result of an orange notice or a red notice coming through to them under director penalty or stat demand, and then it becomes at the forefront of their mind. What it's going to do, though, is it's going to potentially change the advice that they receive from their accountants, about their dealing with tax debt, maybe also around loan accounts and things like that. So there might be a shift in advice from the advisors, but I don't think we're going to see necessarily a shift in behaviours unless they've been through it before.
Yeah, I think it's also interesting where you bring up the orange notices and the red notices so internally we and the people within the industry call them orange and red notices. The oranges are warnings, what we call firm action warnings, and the reds are almost like a letter of demand, pay now. One of the interesting things that we're noticing is we're not actually seeing very many orange notices. We're seeing the ATO go straight to recovery action. So we're seeing director penalty notices being issued without an orange notice, and other recovery action happening in that space as well. When we talk about director penalty notices, I think it's super important even to touch on those again around acting and getting that advice straight away. What are some of the tips that you would give people both before they've got a director penalty notice around lodgements, the impact of these late lodgements, and then how that can change a director penalty notice for people?
I guess first tip is make sure that if you do have a tax debt and you already have a tax debt, then make sure that your address as a director is updated both on the ASIC record and with the ATO, because you do not want to miss one of those notices because it gets sent to an old address. We've had plenty of people come to us saying, I never got the notice, and obviously the legal advice that they go and get afterwards was, well, that doesn't matter. The notice has been issued, you failed to comply.
Yep,
it's dropped dead. You can't rectify it. Now, if there's a defect in the notice, that's a different story, and that's a whole
that's a whole nother day. We need Nigel on here.
Exactly.
If there's a defect, Nigel needs to come onto this YouTube as well.
No, exactly right. So, but yeah, so that's the first tip, because we have seen quite a few, and especially recently, where that's occurred, and to get away from, I guess, the Australian taxation office, it's also important from the state revenue office's
SRO,
position as well.
Yep.
And we're seeing the SRO being a lot more active, especially around, land tax, vacant residential land tax is now coming in as well. So it's important to have those addresses up to date. So that's the first tip. The second tip is to make sure that you, even if you can't pay, lodge. And I'm sure from your point of view as well, Olga, like I know that the ATO views an SBR or a voluntary administration deed proposal, deed of company arrangement proposal. They view those much more favourably if you've been a compliant taxpayer by the mere fact of lodging, even if you haven't been able to pay. The ATO wants to know what the debt is, so lodge. And the great thing about lodging is that gives you the 21-day time frame. If a director penalty notice does get issued, you then have 21 days to decide whether or not you're going to be able to pay, and whether you're going to be able to, if you can't pay, then are you going to do one of the other options on that notice, which is to appoint a voluntary administrator, a small business restructuring practitioner, a liquidator, or go into a simplified liquidation process. So it gives you options.